After a stellar year in 2021 that saw Bitcoin, as well as many other popular cryptocurrencies, reach all-time highs, unfortunately, 2022 hasn't turned out so well. The looming question of a crypto winter has been on many people's minds. Cryptos have taken a dive this year, and unfortunately, it looks like there may be no end in sight. The dreaded crypto winter has finally arrived, and in today's video, we're breaking down everything you need to know. Welcome to Crypto Sketch 101. We're the #1 go-to spot for all things crypto, and we're glad you've stopped by. If you love cryptos as much as we do, please give this video a like, and be sure to subscribe to our channel. In today's video, we're breaking down everything you need to know about the crypto winter. What is it? How long will it last? Most importantly, can you profit from one? We'll take a look at all these questions and more. Just as the traditional stock markets have cycles, so do the crypto markets. When major indexes such as the S&P 500 and Dow Jones fall 20% or more from previous highs for an extended period of time, it's known as a bear market. Though the definition of a crypto bear market is a little less specific, it follows the same pattern. When crypto prices contract and remain low for an extended period of time, it's known as a crypto winter, the crypto market equivalent of a bear market. From their highs in November of 2021, Bitcoin and Ethereum have both fallen nearly 70%, with most other cryptos following suit. Nearly $2 trillion in crypto market value has been shed as well during this time, with no end in sight. As jaw-dropping as these numbers may seem, this isn't the first crypto winter that the market has experienced, and it certainly won't be the last. Because the definition of a crypto winter is a little less specific than that of Wall Street's bear market, there has been some debate as to the true number of crypto winter cycles since the founding of Bitcoin in 2009. Some believe that the first crypto winter occurred in February of 2011. Others believe it wasn't until June of the same year when Bitcoin's price reached nearly $30 before falling back down to around $2 in November. It wouldn't be until February of 2013 before Bitcoin would regain the $30 mark. While previous crypto winters and their durations may be up for debate, there's little doubt about the impact that 2018 had on the crypto markets. 2017 was an unprecedented year for Bitcoin and cryptocurrencies in general. But beginning in 2018, Bitcoin began to crash, and by November of that year, it had declined nearly 80%. The crash had a tremendous impact on the market. Panic spread, and as a result, altcoins plummeted, old predictions of the death of Bitcoin resurfaced, and mainstream adoption was significantly hindered. Cryptocurrencies have evolved tremendously since 2018, however. As such, this crypto winter go-around will have an impact not only for investors, but for companies and entire countries as well. Major crypto exchanges such as Gemini and Coinbase are implementing hiring freezes or reducing headcount altogether. BlockFi announced that it was reducing headcount by roughly 20%, and Crypto.com let go of 260 workers, or 5% of its corporate workforce. Unfortunately, the bad news doesn't end there. Entire countries are feeling the pain. El Salvador made headlines in September of 2021 when it became the first country to make Bitcoin legal tender. The country's Bitcoin holdings are now down 50% and has left the country with no easy exit if they should choose to go another direction. Nevertheless, El Salvador's finance minister has stated that Bitcoin's crash poses extremely minimal fiscal risk because they have yet to sell any of their holdings. Just as bear markets have rebounds, so too do crypto winters. While it's difficult to pinpoint the exact end of the crypto winter and beginning of a bull market, there are some key indicators to keep an eye out for. Just as crypto companies reduce headcount during periods of contraction, the opposite is true during times of growth. Hiring sprees typically occur during bull runs. If hiring picks up again, it will be a good indicator that the market is heading back in the right direction. Disposable income is another factor to keep an eye on. With inflation sitting around 40-year highs, many people don't have a lot of disposable income to spare. Their priorities lie with gas, food, and energy bills. Once inflation peaks and hopefully begins to decrease, disposable income will increase and bring people back to the crypto markets. Many may be wondering how to profit from crypto winters. There are a few strategies that can be utilized, with the best one being perhaps the most popular one. Simply buying and holding. As past crypto winters have shown, there has always been a return to the bull market. With Bitcoin and Ethereum sitting at prices well below their all-time highs, buying and waiting for the return of the bull market is probably the best strategy. For those with a little bit less risk tolerance, steering clear of smaller altcoins is considered a safe bet. In highly volatile markets, smaller altcoins may not survive. As the multi-billion-dollar implosion of Luna has shown, even larger cryptocurrencies are susceptible to failure. As such, as with any portfolio, diversification is important. Spreading assets among a number of different cryptocurrencies and products considerably reduces downside risk. Utilize dollar cost averaging. Rather than trying to time the bottom, set specific checkpoints and do your best to stick to those checkpoints. Dollar cost averaging spaces out investments and helps to take some of the guesswork out of investing. And lastly, don't invest anything you can't afford to lose altogether. While crypto investing can be fun and exciting, it is still not without risks. Heavy volatility and loose or even non-existent regulations create a formula for significant risks. Only invest what you can afford to lose, and keep emotions in check by avoiding FOMO or the fear of missing out. While the thought of a crypto winter can be long, dark, and scary, it's important to remember that it is a cyclical event. Every past winter has always brought a bull market on the other side. There have been a number of past crypto winters, each seeing Bitcoin reach new all-time highs upon their passing. While crypto winters are a time of contraction, it's important to keep an eye on expansion events that could indicate a return to bull market territory. Major crypto firms and exchanges typically reduce headcount during times of contraction and increase headcount and investments in times of expansion. We are currently living in unique times that are seeing macro events such as inflation reach territories not seen in the last 40 years. Disposable income is in short supply, but a reduction in inflation could result in more dollars available for crypto market investing. While there are few different ways to take advantage of lower prices in the crypto winter, perhaps the best is buying and holding. Keep in mind to stay clear of emotional decisions and never invest anything that can't be lost altogether. And that's all that we have for today's video. Hopefully you got a better understanding of the crypto winter, its impacts, and the potential for profit during this unique time. If you enjoyed the video, please give it a like and be sure to subscribe to our channel. Thanks for joining, and we'll catch you in the next video.